Hello traders. Today I will be explaining my simple trading approach that I use to day trade futures. This is a post-it note that I keep on my table at all times, which is a combination of rules and principles that's used to create my overall trading approach. And I will explain each of these points clearly to give you an overall understanding of how I trade. So let's get right into it. I believe that there are three main parts to having a consistently profitable trading approach, and all three needs to work together in order for it to work. The first is having a trading edge, the second is having a proper risk structure, and the third is psychology, which is developing the mental skills that's needed to be successful in a trading environment. First, let's start off with the trading edge. This is where most of the trading videos on YouTube focuses on, but it's only one part of the puzzle. Your trading edge can be defined as a subjective system that you've built where at certain points the price is more likely to do one thing over the other, and you can use one or multiple indicators to do this. I prefer to keep it simple by only using support and resistance levels. My entire trading edge is that I buy at support and sell at resistance. That's it. And I add to winning trades and cut losses short. After 10 months of regularly trading and backtesting, I realized that price movement can be categorized into two states: consolidation and directional. During consolidation, price moves between support and resistance levels without breaking through. In this phase, I buy at support and sell at resistance with a 1-to-1 risk to reward ratio. I set my take profit within the zone and a stop loss outside the zone to make sure my take profit is very likely to hit and the stop loss is less likely to do so. Eventually, price will break out of either the support or resistance zones and starts heading in a uptrend or a downtrend and reach new levels. During this, I wait for a pullback with a stop loss below the previous higher low if it's an uptrend or the lower high if it's a downtrend, and a take profit expecting price to reach a new level. Since my approach changes based on the market category, to apply this strategy effectively, it's important to always ask yourself if the price is making higher highs, higher lows, indicating an uptrend, or is price making lower lows and lower highs, indicating a downtrend, or is price bouncing off of previous support and resistance levels without reaching new levels, which would indicate a consolidation. Remember that consolidation eventually leads to directional, and directional eventually leads to consolidation. By keeping my strategy simple with fewer variables, it becomes easier to replicate and makes trading more enjoyable for me. You can use all the indicators you want, but no matter how much analysis you do, all of them leads to the same conclusion, which is deciding if price is more likely to go up or down. So might as well keep it simple. Keep in mind that the trading edge is not developed through a weekend course or watching a YouTube video like this one. Rather, it will be through months of backtesting and live trading to see what works and what doesn't. And the trading edge you develop will be based on your personal characteristics. Just as you wouldn't become a skilled chef by watching cooking shows without actually cooking, trading requires the same dedication. You've got to put in the work to develop your intuition. Once you have a working trading edge, now comes the hard part, which is simply to wait. In trading, unlike other professions, you truly are paid to wait. My trading edge says to buy when price is at support and sell at resistance, and most of the time, price won't be at the zone that I need it to be. This is when your FOMO will kick in and your brain tells you to enter the trade because it's afraid of missing out. But you have to develop the patience to do nothing until the signal from your trading edge appears. Because if you jump the gun and enter before an opportunity arises, your entire risk structure will be messed up and most likely you'll be stopped out only to see the price move in your favor. And this is based off my personal experience. This might sound easy to just sit down and do nothing, but it's one of the hardest things for me to do in my entire approach since I've always been an impatient kid. And in trading, you'll need to face most of your flaws and overcome them to become successful. Because trading is a game you play with yourself. If you get a winning trade or a losing trade, there's no one to blame but you. The trade doesn't start until you decide to, and it doesn't end until you decide to. Unlike most things in life, you have full creative control when trading, which means you have to be completely accountable for your actions. This is why 95% of people lose money in trading. It's because the answer to trading profitably isn't learning more about the market, rather, it's learning more about yourself. Now, once we've waited and price finally comes into the zone we are hoping for, now it's time to execute. Process over profits means detaching yourself from the dollar amount in your account and focusing on the process of being disciplined to follow through your trading approach without hesitation, fear, or doubt. This means once a signal from your trading edge appears, you have to be able to enter the trade without a second thought. Because if you let fear take over and enter a trade too late or too early, that will mess up your entire risk structure and it could turn a winning trade into a loss. So you need to be process focused rather than outcome focused. That's why a good trading day for me is whether or not I followed my trading edge and stayed disciplined even if it resulted in a loss. And ironically, when you focus on the process, the outcome will take care of itself. And now we move on to the main part of my process, which is to add to winners and cut losses short. Add to winners and cut losses short. This is the main point I want to get across in this video, since I believe this is the key to becoming a successful trader. Add to winners and cut losses short. I implemented this after reading The Best Loser Wins book by Tom Hugard, which I highly recommend. By following this, it will objectively make you a profitable trader long term. So let's do the math. This is the formula for a consistently profitable strategy. Assume your win rate is 40%, which means you're wrong more than you're right. And if you take a sample of 20, that means 8 trades are going to be winners and 12 are going to be losers. But if I make on average $400 on a winning trade and only lose $100 on a losing trade, since the winners are bigger than losses, after a sample of 20 trades, that will leave me with a net profit, even though I was wrong more than I was right. This shows that to be a consistently profitable trader, your winnings have to be bigger than your losses, and you have to become good at losing, because you cannot avoid losses in trading. Since price only goes up or down, there's a 50-50 chance that your trade will be a winner or a loser. But if you make more when you're right versus when you're wrong, at the end of the week, month, and year, the P&L will be looking green. Now let's move on to the final part of my approach. As I mentioned at the start of this video, my trading edge is going long at support and shorting at resistance. But does that mean price always bounces at the levels and goes into profit? Of course not. A trading edge is not supposed to give you the outcome of every trade you take. Rather, it will give you the outcome of a sample of trades like I showed in the previous example. And that's what n equals 20 means. It's a reminder for myself to be unfazed by the outcome of each trade and to think in probabilities. My trading edge has a 50% win rate, which means in a sample of 20, 10 trades are going to be winners and 10 are going to be losses. The key is to remember that you cannot predict which trades will be winners or losers on a trade-by-trade basis. What you can control is following your process, adding to winners, cutting losses short, and waiting for the opportunities that fit your edge. By doing this, I know through countless hours of backtesting and live trading that at the end of the sample, I will come out profitable. So stay focused on the big picture and trust your edge. Understanding this will help you keep your emotions in check and allow you to go through streaks of wins and losses with ease. Finally, the only rule that I have is not to trade until 10:30 in the morning. To summarize my approach, first, through months of backtesting and live trading, I developed a trading edge. This can be anything you want. It could be used in moving averages, Fibonacci's, ICT concepts, it does not matter. But it is better if it's simple and easy to replicate. Then I wait until the market shows me an opportunity to enter a trade that's aligned with my trading edge. There's only two possible outcomes after putting on that trade. It will be a winner or a loser. If price goes into profit, I'll look to add to it, and if the price seems to be going against me, I'll look to exit at a smaller loss. Doing this repeatedly, it will ensure that long term I make consistent money trading. Trading is simple, but it's not easy. But if you are persistent enough where giving up is not even an option you consider, it will give you the life that you desire. I hope this video helped change your perspective on trading, and if so, consider liking the video and subscribing because I will be posting more in detail videos about everything talked in here and more. Thanks for watching, and I'll see you in the next one.